Hello, welcome to another broadcast of Master Investor Company. Glad to be here again with another valuable video about money, business, and investing. If you are hearing us from our podcast channel, welcome again. If you're new, then make sure you consider subscribing to our channel and also here on YouTube and any other platform that you're hearing or seeing this video blog. Today, we're going to be speaking about what is cash flow and what is phantom cash flow. Okay, there's a difference, and I'm going to show you by the end of this video the difference between the two, and it's going to help you build true wealth. Okay, here at Master Investor, our mission is to elevate the financial well-being of humanity through high-quality financial education made simple with lucrative opportunities to build passive income and true wealth. Remember, there are three types of income that exist. Majority of people spend the entire life working for, I consider, the worst type of income, which is earned income or ordinary income, which is the type of income that you get from a job when you exchange your time for money. Usually you work a certain amount of hours and you get paid through a paycheck, okay, or a salary. And the reason why that is the worst type of income, because it steals your time, which is the most valuable asset that you have. And also it doesn't allow you to build true wealth or any type of freedom, okay? Usually the more money you make, the more hours you need to put in and the more responsibilities you'll have to endure, okay? So the second type of income that a person can work to build is capital gains income. And that comes from when you purchase something at a certain price, like a stock for $20, and you sell it in the future for $30. That gain is called capital gain income. And the third type of income is passive income, which is what we focus here at Master Investor. We help people build their asset column with real assets that pay passive income, which allows you to minimize taxes all the way to zero. And you know how I feel about taxes is the number one highest expense that we all have. So if you can minimize that all the way to zero, then you are a tax-free entity legally, and you can keep as much cash flow into your pocket, and therefore you can achieve more freedom in your life. Okay, so earned income and capital gains income are taxed at a higher bracket than passive income. Okay, so the ultra wealthy, we can accurately say that we work to build passive income. And that's why rule number one of our community here at Master Investor is that we work to build passive income and make money work hard for us. Okay, so it does not take money to make passive income. It takes knowledge, and it takes, of course, financial education. And that's why we are more than an investment management company. We are solving the problem of the lack of financial education, okay, in the world. And thankfully so, we have technology today that allows us to deliver high quality financial education right to your devices at home or wherever you reside. Okay, so if you're watching this video or hearing us on our channel, make sure you leave us a question below if you have one, so I'll come back and answer that for you. And make sure you smash the like button and share this great content with others, because remember, business and investing is a team sport. So you want to be exposing those around you with the information that you're gathering every single day that is helping you build true wealth. And it's better to do things as a team, and you can go back and forth on it, give opinions, and come to your own conclusion. Remember, here at Master Investor, we give you the knowledge and the financial education so that you make your financial decisions. We're not going to tell you how to invest. We're going to give you the information that is required for you to make your own decisions. Ultimately, you call the shot. And that is why we are here, because we are in the mission of helping you elevate your financial well-being. Okay, so we're going to dive into our blog. Remember to visit our website at masterinvestor.education. You can find the link in the description, and you go to the blog tab and you'll find all of our blogs that we're publishing every single week with great information. So if you're hearing this and you like to read it, then go to our blog. We have it right there. Okay, so what is cash flow and phantom cash flow? As you already know, cash flow are the most important words in the business and investing world. Okay, that is the blood of the business or investment. When we're speaking about investing money and raising capital, you're going to be wanting to show the cash flow analysis to whoever you are showing the investment or pitching your business idea. Okay, so the cash flow is what's going to determine whether something is an asset and a liability. Remember, I talked to you about how we all have a financial statement, regardless of how rich or how poor you are. It doesn't matter. You all have a financial statement. And so understanding how to read financial statements are the essence of true wealth. It is how you're going to get ahead financially, because not only you're going to be able to take control over your own finances, but you're also going to be able to tell whether something is a sound investment. And you can say, you know, this investment is not good because the cash flow is flowing out of the company and there's nothing left for the investors or for yourself. And the same thing goes with your own personal financial statement. Okay, you're going to be able to tell whether you have any assets or how you earn your income, what are your expenses, what are your liabilities, and how the cash flow flows in your financial statement. And you can tweak it and adjust whatever needs to be done to it to improve conditions. So it's very important to learn and get used to reading financial statements. So a good exercise, if you don't know or never seen a financial statement in your life, is to go to our website and download the How to Build Cash Flow with the Internet. And it has a financial statement in there that you can download. It's an Excel format. You can print it out, or you can use your computer to fill it out. And it was going to walk you through the entire format, where you're gonna spill your expenses. You're gonna tell how much money you earn and how that flows into your asset column and your liabilities. It's okay if you don't have any assets, you still have a financial statement. You're gonna be able to say, okay, this is what I need to do, this is what I need to adjust in order to start building passive income, because it is in the asset column where you'll find total freedom. A lot of people focus on the income column, and there are 6 words that you'll find in that financial statement that we talked about it on our last live stream, which was yesterday, where we said the 6 words are income, expenses, liabilities, and assets. And the last 2 words are cash flow. Okay, so that's what the financial statement is composed of. And once you start reading your own financial statement, you will understand why every business and investment, they also have their own financial statement, and you can read them and tell the real story behind that business or investment. So when you are going to acquire a business that is running, you will ask the seller, I need to see the financial statement of that business. And you're going to be able to tell, regardless of what the salesperson or the broker is telling you, you're going to make the decision because you have the knowledge and you have the financial education to say, hey, this is a sound investment. It's making cash flow. It's been making cash flow for the past however many years. And this is what we can do to improve the asset column of this business or investment. The same way goes with your own personal financial statement. Okay. So let's dive into today's topic. What is cash flow and phantom cash flow? Okay. Before I dive into the 4 ways you can profit from real estate, I want to quickly touch on the difference between direct cash flow and phantom income, because real estate provides both types of income. What is cash flow and phantom cash flow? Cash flow is money that flows directly into your pockets on a regular basis. This can be monthly, quarter, annually, etc. But it is realized income that is passive in nature. By passive income, I mean income that you do not have to work for. It comes automatically because your asset itself creates the income. In other words, it's a system of systems working hard to make money in the form of passive income for you. Okay, that's why I always say when you're building a business, you're not going to be working in your business, you're going to be working on your business. So eventually you can depart from that business because it will be running on autopilot. That's why if you never had an asset, it will be good to look into your digital assets that today we can tap into. Okay, we have a ebook that you can read and it will tell you exactly how to start creating digital assets. And if you have a topic you want to speak about, you can create an ebook and start getting residual income from the sales of that ebook. You just create it one time and you have a system that will do the selling and telling for you. Okay, and will collect people and prospects that are interested in buying that ebook, and you just go to sleep and you wake up to sales. So there are many ways you can create digital assets today. And the beautiful thing about the technology is that you have zero overhead. Okay, remember what I told you, it does not take money to make money or passive income, right? It takes knowledge. So you need to have systems and you need to have an idea that you bring into reality, put it together and link it to the systems and start understanding marketing, because it is important. Okay, when you're building a business, you need marketing. Okay, so you need to know a little bit about everything so you can put a team together, because we spoke about the 8 elements that are the most important when it comes to building a successful business, which is the mission, the team, the leadership, the cash flow, communications, systems, legal, and product. Those are the 8 elements that you need in order to build a successful business. And if you're looking at a business, you want to be looking at those 8 elements and ask yourself whether that business successfully are accomplishing and have all those 8 elements working together to fulfill the mission and the vision of that business. Okay, so let's continue. So an asset, just to summarize, is outside from you and it's creating passive income. That's truly what an asset is. It's a business or an investment, okay, that you are not involved in the midst. You're not working in the business. You either have people or a system of systems doing the selling and telling for you, and that's printing money to you legally. It could be a residential home that you have renters in it, and now that is printing you money every month because they're paying you every month, and you just pay the mortgage and you will collect whatever is left to pay the expenses, and as much you will also keep a positive passive income from the profit of that residential property, for example. And we're going to look at 4 different scenarios today on how you can create phantom cash flow. Okay, and as I said earlier, passive income is one of the lowest taxes income. It's the lowest tax income, okay, and extremely powerful for building wealth. Phantom income is a new concept to many new investors, but it is a powerful way to build wealth. Phantom income is not direct cash flow, but it is savings that come to you through tax savings, time savings, etc., as well as the potential gains you might have in the future. I will explain more, because in real estate, there is one profit center that is cash flow based and 3 that are phantom income based. Okay, now here are the 4 profit centers of real estate. Real estate profit center number 1, cash flow on operations. As the name implies, this is the cash flow profit center of real estate. If you are holding real estate as an investment, you will have tenants. Each month they will pay you rent. Let's say that you own a rental house and get $1,000 per month in rent. Over a year, that is $12,000 in income. Now subtract out your expenses, which include things like your taxes, insurance, your property management, vacancies, turnover expense, allowance for repairs, etc. This does not include your debt. More on that later. For purposes of this example, let's assume that your monthly average expenses are $100 a month. Your cash flow on operations then will be $900 per month. The tenant, of course, is giving you $1,000, and there's $100 in monthly expenses, so you have $900 per month. That is what is referred to as your net operating income, NOI. Out of your NOI, you pay your debt service. Let's assume for this example that you have a $200,000 property with an $180,000 loan at a rate of 3.7%. That is a debt payment of about $830 a month. So that would be rental income of $1,000 minus $100 in operating expenses minus $830 in debt service, equaling $70 in positive cash flow. That times 12 equals $840 in cash flow per year. That $840 divided by your $20,000 equity stake will equal a 4.2 cash on cash return. But that's not the end of your real estate profit story. Let's move on the next profit center, amortization. Real estate profit center number 2, amortization. Amortization is a concept of paying down your debt service. It is phantom income because you don't get the money in your pocket each month, but your equity grows with each payment you make. And because your rental income covers the debt payment, it is income to you. Let me explain further. Each month, when you make your debt payment, or rather your tenant makes your debt payment out of your NOI, a portion of that goes towards paying down your principal on the loan. When you hear somebody talk about a 30-year fixed, fully amortized loan, it means that when you make all 360 of those monthly payments at the end, the loan is 100% paid off. Because your tenant is paying rent and that rent is covering the debt payment, the principal pay down included in that debt payment is actually profit for you. Let's take a look at how this plays out with our $180,000 loan from above. In the first year of the loan, you will be paying $6,604 in interest and $3,338 in principal. As the loan matures, the interest amount goes down each month and the principal amount goes up. But we will use these numbers for now. That $3,338 is profit to you. It is true equity in your property. If we add this $3,338 to the $840 in operating income, we now have a total of $4,178 in income for the year, a 20% return on our 20% invested into the property. Plus, your interest payment is often tax deductible. So add a bonus, but check with your tax advisors to be sure for your specific case. Already you are crushing average stock market returns, and there are still 2 more real estate profit centers to look at. Real estate profit center number 3, depreciation. Depreciation is another form of phantom income, but it is also often referred to as phantom return. The basic concept of depreciation is that your investment property is made up of 2 parts, the land and the improvements of the land. Example, your house. Appraisers will assign percentage values to your property based on these 2 parts. For this example, 20% of the value is the land and 80% of the value is the improvement. Over time, the house will deteriorate. So the government in the US, check with your tax advisors to make sure you qualify, lets you write down that 80% value over a certain number of years depending on the type of real estate. For residential homes, it is 27.5 years. So your 200,000 property has 160,000 that can be depreciated over 27.5 years, which equals $5,818 per year. This amount is listed as a loss of income, even though no money is coming out of your pocket. Now let's see why this is called phantom income. Let's assume you are in a 30% tax bracket. That means that applying 30% to your depreciation of $5,818 nets you $1,745 in annual tax savings. Adding that $1,745 to our existing income of $4,178 of the example above, we now have $5,923, a 29.6% return on your cash of $20,000 that you invested to get the property. Let's take a look in that $20,000 you invested in that property. Doesn't have to be your hard capital. It could be used. It could have been invested with a credit card or with a loan. So if you have $20,000 cash, you should just go ask for a credit card and then use the credit card to pay the down payment, which will make more sense. And you keep your capital for working capital or leveraging yourself into acquiring another greenhouse. Let's take a look at the last profit center, appreciation. Real estate profit center number 4, appreciation. Appreciation is the phantom income frosting on your cake. I don't invest in real estate for appreciation. I'm a cash flow investor, but I do appreciate my appreciation, pun intended. Let's assume you have a conservative appreciation rate of 3% a year on average for your $200,000 property. That equals $6,000 per year in value added to your house. Add that to your $5,923 and you have $11,923. That is a 59% return on your $20,000 capital investment in your $200,000 property. And that blows investing in the stock market for the long term out of the water. These types of returns are achievable by anyone, as long as they understand how to find the right deal and run the numbers correctly. And it takes a high financial IQ. Okay, that's why we suggest that you continue with your financial education and understanding the new rules of money. That's why we have courses and ebooks that can help you increase your financial IQ by providing to you high quality financial education like what you're hearing today. So there you have it. Okay, now you understand the difference between what is cash flow and phantom cash flow. As I promised, I was going to give you that difference, and now you can get started with your cash flow and phantom cash flow. Okay, and remember, phantom cash flow is that type of cash flow that other people cannot see because they lack the financial education and they just don't know any better. Okay, then now that you have the tools and resources, you can also find us on all platforms at Master Investor. And as you already know, bringing you the good and bad news of money, the business principles that work in all economies. And remember, today money is created with debt. So get used to using debt to invest for passive income. So that $20,000 to invest to acquire your first asset. If you're talking about real estate, then if you have $20,000 cash, think about creative ways that you can use debt. Use that $20,000 to go ask for a loan, a credit card, and then use a credit card to pay for that down payment. Okay, it's easy to use your own capital. Okay, it doesn't take any financial education, but it does take financial education and creativity to use OPM, other people's money. And that's how the rich gets richer, because we are using OPM and OPT, other people's time, and OPM, which is other people's money. So since debt is leverage and debt is how money is created today, is tax-free. So right off the bat, we're already minimizing taxes by using debt. And if we're investing for passive income, then passive income is the lowest taxed income that exists. So now we have debt, which is tax-free, and we have passive income that we can minimize taxes all the way to zero when we have the right team. That's why it's important that you get your tax advisor, you get your lawyer, and you get a team of people that are experts in specific areas to help you get more wealthy legally, okay? Not all attorneys and not all accountants and tax advisors are in the level of understanding the new rules of money, okay? You need to understand financial education so that you can acquire the right group of people that can help you achieve your goals financially, okay? Because a lot of them, they don't even know what they are doing in regards to building wealth, okay? You need to have the entrepreneur and investor mindset in your team, okay? Always invest with the entrepreneur and acquire people that also see that mindset, okay? Even though they have a degree and they're a lawyer or they are a tax advisors, they understand how to use the law and the tax code to minimize taxes all the way to zero legally and make you rich for free. Because if you're using debt, which is other people's money, to invest for passive income, we can say that we are getting rich for free. So remember, protect your assets, get incorporated, start building wealth, start understanding how to read financial statements. And as I always say, back in 1971, the new rules of money emerged because President Nixon separated the gold standard from the US dollar. From that point on, money became monopoly money, became paper money, became just an idea backed up by confidence. And from that moment forward, savers become losers and debtors are winners. So learn how to use debt to invest for passive income. And remember, two types of cash flow, right? Direct cash flow, which comes from the business itself or the operation itself every single month, and then the phantom cash flow, okay? Which is the type of cash flow that the average person cannot see. All right, I'll see you on the next broadcast. Thank you for your time. I appreciate your subscribing to our channel, and make sure that if you have a question to leave us your feedback below, and we're going to come back and answer that for you. And I'll see you in one of our e-courses. Make sure you read one of our ebooks, how to build cash flow with the internet or the 10 new rules of money. Go to our website, MASTERINVESTOR.education, and get involved in one of our digital courses that we have to help you start building passive income with real assets that pay you cash flow. All right, I'll talk to you later.